Good afternoon, everyone. We are the Group 1, and I am Roland Calvadores, which will report about the information environment. First question: what is information? Information is the answer towards uncertainty. It also defines the characteristics of an organization. Information has different meanings in different contexts. Say, for example, in accounting information system, information should be recognized as a business resource along with raw materials, capital, and labor. Every business should and must have information in order for it to survive. A mixture of internal and external information should help on it. So, what are these two information? First, internal information. Internal information is the first source of business. It can be get in the employees, in the sales, expenses, or any activities that happen within the business. The second one is the external information. External information are informations that can be get outside the company, such as the industry or even other business classified as competitors and the government itself. Knowing how to handle these informations properly should help the business plan, analyze, set goals, and survive in the industry. How are these information flows within the organization and external users? Based on the PPT, there's a pyramid. That pyramid is horizontally divided into levels of activity. There are four. First, top management. Top management are responsible for long-term objectives and plans, and also organizational objectives. It includes executives, CFO, CEOs. Next, being the second, is the middle management. Middle management includes managers, or say for example, branch managers. They're responsible for setting shorter term objectives and plans, and also for the coordination of activities to other departments in order to achieve the organizational objective. The next is the operations management. They manage the day-to-day operations of the business. Being the last is the operations personnel. They are the one who performs the business operation. So for example, they are the one who sells the product, manufactures the product, and distributes the product. So how are these information flows within this organization? Take a look at the PPT. At the pyramid, there is a vertical and horizontal arrows. First, let's discuss this vertical arrow. This vertical arrow is positioned on operations personnel. This information flows vertically towards the operations personnel. What are those? Informations such as the sales, the expenses incurred by the business, and also the capital for a certain product. It is very high detailed, and also it consists of very important informations which will be used by the operations personnel. Now, take a look at the horizontal arrow. There are two, right? First, a downward. The second is the upward. Let's discuss the downward first. This downward arrow starts from the top management up to the mid, and then the operations management, and lastly to the operations personnel. So what are these informations that flows downward? These are information such as budget and instructions which will be followed by the middle management and then the operations management up to the operations personnel. These informations are made by the top management in order for the middle management, operations management, and operations personnel to succeed. Again, these informations are instructions to be followed. And then the next is the arrow pointing upward. So what are these? It starts with operations personnel up to the top management. This information consists of summarized information because management doesn't really need a highly detailed information unlike the operations personnel. The management or the top management should read only the summarized information. And with this summarized information, they will conduct a plan. But take note, the summarized information consists of very critical informations that will help the business achieve its goals. There is another exchange of information depicted in the pyramid. This exchange of information happen between the organization and external users. What are those external users? External users fall into two groups: trading partners and stockholders. Information regarding trading partners include customer sales, billings, and purchase inventory receipts. On the other hand, stockholders are entities that has a direct or indirect interest towards the firm. Information regarding stockholders include financial statements, tax returns. Moving on to the next topic is the information system framework. But first, let's introduce what a system is. The word system has different meanings. But whenever we think about it, we always have this image of computers and programs. But no, there are two types of system: the natural system and artificial system. Under natural systems are a system of universe, galaxies, a system of electrons, neutrons, protons. On the other hand, artificial system includes a system of automobiles and computers. Regardless of what system really means in different situations, we must remember that a system is a group of two or more interrelated components or subsystems that serve a common purpose. Now, we have three elements of a system. The first element is the multiple component. A system should have more than one part for it to function. And then the next is the relatedness. Every part of a system should be connected with each other at some point. And then the last is the purpose. A system should have its own aim or intention for its existence. For us to fully understand how this system works, we must first analyze these two terms. The first term is the system decomposition. System decomposition is the process whereby we divide the system into smaller subsystems. It is the most useful way to show the relationship among subsystems. And then the next is the subsystem interdependency. Every subsystem should work with each other. If a subsystem fails to perform its objective, the overall system will also fail its overall objective. So what is information system really is? Information system is a set of formal procedures by which data are collected, processed into information, and distributed to its users. Next slide. The next slide shows an example of an information system of a firm decomposed into several subsystems. As we can see, based on the chart, there are two major classes emerge on decomposition: the AIS or Accounting Information System and MIS or Management Information System. The distinction between these two depends on the concept of transaction. Next slide. A transaction is an event that affects the interests of the organization and processed by the information system as a unit of work. There are two major classes of transaction, namely financial transaction and non-financial transaction. First, Financial transactions are economic event that carried out between a buyer and a seller in an exchange of an asset. A good example of this are sale to customers and purchase of materials to suppliers. And on the other hand, the next is the non-financial transaction, which are transactions that doesn't involve money or goods. Say, for example, is the loss occurred due to a fire accident. Financial and non-financial transactions are closely related with each other and often processed by the same information system. The figure above shows how information system accept inputs called transactions which are converted into output information that helps the user's decisions. Again, I am Roylan Calvadores of Group 1. Thank you. Next reporter.
Eduardo Castro Jr. and I am the next reporter. Information System. Information system is an integrated set of components for collecting, storing, processing data, and for providing information, knowledge, and digital products. Corporations use information systems to process financial accounts, to manage their human resources, and to reach their potential customers using online promotion. This includes eBay, a large auction marketplace, Alibaba, a business-to-business e-marketplace, and many more. The information system has two broad classes, and these are AIS and MIS, Accounting Information System and Management Information System. Let us first meet the definition of AIS. An accounting information system is a structure that a business uses to collect, store, manage, process, retrieve, and report its financial data so it can be used by its users. The AIS has three major subsystems: TPS, Transaction Processing System; GLFRS, the General Ledger Financial Reporting System; and the MRS, Management Reporting System. First in line is TPS, Transaction Processing System. It is an information processing system for business transactions involving the collection, modification, and retrieval of all financial data. Characteristics of TPS include performance, reliability, and consistency. There are two types of TPS: batch and real-time. Real-time is a data processing that occurs when users enters in a data or command. Batch processing involves execution of jobs at the same time. So next in line is the GLFRS, the General Ledger or the Financial Reporting System. Transaction cycles process individuals' events that are recorded in special journals and subsidiary accounts. Summaries of these transactions flow into the GLS and become sources of input for the Management Reporting System and the Financial Reporting System. The Financial Reporting System communicates this information primarily to external users. Management Reporting System. A management reporting system is a part of a management control system that provides business information. This information can be in the form of reports and/or statements. The system is designed to assist members of the management by providing timely, pertinent information. We now all know the definition of AIS and its three major subsystems. Now let's take a look on what is the definition of MIS, Management Information System. In business, management information systems are tools used to support process, operations, intelligence, and IT. MIS tools moves data and manage information. They are the core of the information management discipline and are often considered the first systems of the information age. Examples of MIS applications in functional areas. Under the function of finance, we have portfolio management systems and capital budgeting system. In marketing function, market analysis, new product development, and product analysis. Under the distribution function, we have warehouse organizing and scheduling, delivery scheduling, and vehicle loading and allocation models. Under the function of personnel, we have human resource management systems like job skill tracking system and employee benefit system. Before we proceed to the next topic, let us first compare data versus information. Data. Data are simply facts or figures, bits of information, but not information itself. When data are processed, organized, interpreted, structured, and presented so to make them as meaningful or useful, they are now called information. To simplify, data are simply facts or figures, while information are processed data. As you can see in the figure, in general, the elements of accounting information systems are users, resources of data, data collecting, data processing, management of database, production of information, and feedback. So let us give definition to each of the elements in the accounting information system. First, users. Users are divided into two, as external users and internal users. I know we are all familiar to users, so I will not further discuss it. Next. Next is data resources. These are data consisting of financial transactions coming into the system from both internal and external resources. Data collecting. Data collecting is the first operational stage of information system. There are two rules that governs in data collecting: appropriate or relevance, and efficient or effectively. Next is data processing. The collected data need to be processed for information. Mathematical algorithms used for planning production can be one of them. Next is the database management. The database of organizations is physical financial data storage. This storage area can be a file keyboard or computer disk. The database has three main functions: storing, retrieving, and deleting. D is the information production. Information production is the process of arranging, formatting, and presenting information to the users. To move on, let us go to the next topic. As you can see on the figure is the data hierarchy. Business data can be organized in logical hierarchy. There are three levels in this hierarchy. These levels include attribute, record, and file. First is the attribute. Attribute is the most basic unit of data. It is the smallest piece of information collected when capturing data. A set of attributes of an entity effectively describe that entity. When translating the design into a relational database, each attribute becomes a column. For example, in the accounts payable system, we must capture information about all the suppliers or vendors. Each piece of information about the supplier, like its name, address, contact number, bank account details, represent the different attributes of a supplier. Next is record. Each incidence of a unique set of attributes of an entity is called a record. One record represents one occurrence of the entity. Each record becomes a row in a relational database. Every record must be uniquely identifiable by a primary key. For example, each supplier is recorded in the database as one record. To identify each supplier uniquely, it can be assigned a unique supplier number. The supplier name may not be adequate to identify a supplier uniquely, as many suppliers may exist with the same name. Lastly is the file. A file is a set of all the records of an entity. For example, the supplier file stores all information about all the suppliers of an organization. As in line is the database management system. The database management system, or DBMS, is a system software for creating and managing database. Function of a DBMS. The DBMS manages three important things. First, the data. Second, the database engine that allows data to be accessed, locked, and modified. Third is the data schema, which defines the database logical structure. That's all. Thank you.
Takyo, and I'll be the next reporter. We all live in an age where information equates power. It is created and acquired for use socially, culturally, and even so economically. And with recent advances and developments, it made access to information flexible. It made information ubiquitous, meaning all information is made available everywhere, whenever, and wherever. However, there were a number of critical points with regard to information, specifically on how one is generated while taking into understanding its purpose, how one is generated, that is then what we call information generation. The process of generation of information makes up an integral part of all field and study, especially for accountants, which a view that is discussed in this chapter. Though from the book, its definition of information generation make it seem a lot easier, make it seem a lot simpler, that information generation is just the process of compiling, arranging, formatting, and presenting information to users. But it isn't just simply compiling, arranging, formatting, and presenting. It is much more complex in practice. For accountants go through numbers of record, there comes the transactions or the sales order, as well as structured reports and presentations, even so evaluation. This is in order to simply make and keep reliable and useful accounting. So what makes a useful information? On accountancy, regardless of its form, a useful accounting information should have this what they call as qualitative characteristics that then states that a useful information should be first, relevant, or is important to the matter at hand, that it will bear an impact on the decision of someone reading through it, for it demonstrates applicability and appropriateness to the matter at hand. Second is that it should be timely. The information should be made available and accessible early enough to be used by its people. Third is accurate, that it ensures that every information added to the system is correct and or free from material errors. The fourth one is it should be complete, that all essential information are present or is included in the report. Lastly is that it should be summarized. The information presented should be in a form that the user can easily understand. It should be expressed just enough, for being bombarded by too many information or highly detailed report may make it a bit overwhelming to the user. So it is a must for every business to make use of every tool available for their growth and their productivity. And one of the tools which offers benchmarks that helps organization make modification and assist them in their direction by providing details on which areas of the business makes the best is what we know as feedback. Feedback can come internally and externally. Either way, it offers businesses an objective and straight assessment on their standing. Businesses establish multiple objectives in any of its department, even on its information system. Information system objectives can vary from one firm to another. However, as stated, businesses should still have these three fundamental objectives. First is to support the stewardship function of the management. With having limited resources at hand, a business should set a guideline on how they will utilize or make the best possible use of their available resources. The second one is to support the management decision making. And the last one is to support the firm's day-to-day operation. Businesses should have an information system its users can rely on with regard to carrying out and managing the business operations. There are usually two ways that a business can acquire information system. This is either through first, developing customized system from scratch through in-house activities. Second is by purchasing pre-programmed commercial systems from software vendors. We all know industry is ever-changing, so most businesses, specifically the larger ones, engage in in-house development to meet their needs. The process in which is called as system development life cycle. While software vendors then range is small firms and even large firms that have standardized information needs. So the first one is the turnkey system. From the term itself, turnkey, like that from a car wherein if you turn the key, you allow the system then to work. Turnkey is known to be ready to install system for it is completely finished and tested that it can be put to immediate use. The second one is the backbone system, a combination of turnkey and a customized system, allowing one to develop it to meet their needs. And lastly, the vendor-supported system. So after we're done discussing a brief overview about the information system in an organization, now is organizational structure. Organizational structure is a framework used to portray hierarchy or distribution of authority, responsibility, and accountability. It is essential for an organization's success that each has a clear understanding of their organizational structure to effectively assess and manage their information need that has a great say in their decision making. With having limited resources, they would need to choose only the best opportunities, and one of it is business segmentation. Business segmentation is the process of dividing the company's overall operation. Businesses create subsections of their overall company to identify which areas are at its best or is just doing enough or needs further improvement. Business segmentation allows them to know, assess, and understand their market. There are three common approaches used by businesses in segmenting. Namely, first is geographic location, in which businesses divide their operations over various locations to cater different customers over different regions. However, this approach is used by some, especially small businesses, in a different way, in which they serve in a certain territory with wide customer base, setting a business in a single location while serving varying customers. Second is product line. Businesses use this to evaluate and address the needs of the customers who have varying demands in a given market. And lastly, business function. This approach is used by dividing the overall company to fully functional, meaningful groups. Functional segmentation shall provide a guideline to the employees by presenting the relationship among its people, their function, and its facilities that regulated the workflow of the organization. So presented is a figure that illustrates a structure of an entire business organization that is divided in 8 major functions.
I am Serena Karangian and I will be discussing the next topic, accounting function. So, the topic accounting function has two subtopics, which is the value of information and accounting independence. These two will be discussed later, but first, let us focus on the definition and responsibility of accounting function in an organization. Accounting function in an organization is the one who is responsible in managing the financial information resource of the firm. Specifically, it is about data identification, collection, and storage process. It is as well as information development, measurement, and communication process. Having said that, we can regard there are two roles of accounting in an organization. It captures and records the financial effects of the firm's transactions. It is about efficient and effective collection and storage of data concerning an organization's financial activities. The number two role of accounting function in an organization is that it distributes transaction information to operation personnel to coordinate many of their key tasks. This is about supplying information useful for making decisions. Some of its examples are passing reports or financial statements to managers to guide them in making decisions. Let us now discuss the first subtopic under this accounting function, which is the value of information. The value of information pertains to the difference between benefits realized and the cost of obtaining the information. What do we mean by this? Benefits refers to the quality of information which should reduce uncertainty, improve decisions, improve ability to plan and schedule activities, and which should result in lower organizing costs. While costs refers to the time and resources spent to produce and to store information. Decisions rely heavily on information, and an effective decision requires information that has a high degree of reliability. In order for an information to be reliable, it must possess certain attributes such as relevance, accuracy, completeness, summarization, and timeliness. What do we mean by these attributes? Relevance means appropriateness of information. Accuracy is about being free from error. Completeness is being free from omissions. Summarization is being short and concise, while timeliness is about time sensitivity of information. Let us discuss another topic, which is accounting independence. Accounting activities must be separate and independent on the functional areas that maintain custody of physical resources. For example, the one who will handle cash should be different from the one who will record cash. Another is the one who handles stocks or raw materials should be different from the one who will record the movement of raw materials. Let us now go to the next function of organization, which is information technology function. With the increasing complexity of the world of business comes an increasing amount of data that businesses have to deal with every day. This data also comes in multiple dimensions. In order to control this data, firm needs information technology function. Information technology function has two structures. The first one is central data processing systems approach. This approach handles central system in which IT activities are consolidated and managed as a shared organization's resource. It is more secure as all the data and processing is handled at a single place. It also has various areas of operation such as database administration, data processing, and systems development and maintenance. Let us take Wikipedia as an example. Wikipedia considers a massive server to which we send a request and the server responds with the article that we requested. Now discuss the various operational areas of centralized data processing system. The first one is database administration. Database administration is an area which manages, backs up, and ensures the availability of the data produced and consumed by today's organizations via their IT systems. It is headed by database administrator, which is considered as custodian of an organization's data. He is responsible for the security and integrity of the database. The next operational area is data processing. Data processing refers to the process of transforming raw data derived from day-to-day transactions into meaningful outputs. It is composed of four functions such as data control, data conversion, computer operations, and the data library. Data control serves as an intermediary between data processing and end users. It is the one that is responsible for accepting group of transaction documents, then pass it on data processing group. After it was processed, the data control group will then receive the processed data and distribute it back to end users. Next is data conversion. Data conversion group is the one who is responsible in converting transaction source documents, which is usually hard copy, into digital media or soft copy in order for it to be suitable for central computer processing. Next, computer operations group is the one who is responsible in processing the information transformed by the data conversion group in central computers. Last one, data library refers to a room that provides safe storage for the offline data files such as magnetic tapes and removable disk packs. Operational area in centralized data processing approach is system development and maintenance. In order to continually provide the needs of users, system development and system maintenance is very important. The system shall be periodically reviewed and modified as problems arise and as new needs become evident. But what is the difference between system development and system maintenance? System development refers to the function that is responsible for adding and modifying the code to support the changes in user specifications. On the other hand, system maintenance means restoring something to its original condition. Maintenance conforms the system to its original requirement, while development adds to system's capability by incorporating new requirements. Let us now discuss the second structure under IT function, which is distributed data processing. Distributed data processing are often used to collect, access, and manipulate large datasets. If datasets is too large to be processed by a single machine, it is instead distributed among many machines, each of which process a portion of dataset. There is no single entry that receives and responds to the request. unlike in centralized data processing approach. Let us take Google search system as an example. Each request is worked upon by hundreds of computers which crawls the web and return the relevant results. To the users, the Google appears to be one system, but it is actually multiple computers working together to accomplish one single task, which returns the results to the search query. In distributed system, if one machine crashes, the system as a whole can still survive. Distributed data processing has various advantages and disadvantages. Let us now enumerate the advantages of data processing system. It includes cost savings, increased user satisfaction, and improved operational efficiency. Because it is cheaper to create a network of systems containing a part of the database rather than one compact central database. Also, if data is distributed in an efficient manner, then users' requests can be met from local data itself, thus providing faster response. Additionally, distributed data processing improves operational efficiency as when a component fails, the functioning still continues. Let us now enumerate the disadvantages of this processing system. Disadvantages includes lack of control, inefficient use of resources, destruction of audit trails, inadequate segregation of duties, and increased potential for programming errors and system failures. Since it is composed of numerous databases, it is very complex to control, which may cause programming errors and system failures. Also, various databases might be widespread, which may give rise to issues regarding inefficient use of resources and inadequate segregation of duties, as these are difficult to constantly monitor.
Hello, my name is Marco Andy El Cagata, and I'm going to talk about the evolution of information system models. For over the past 5 decades, many models have represented accounting information system in accordance to the user's preference, constraints, or privilege. Each new model evolved because of the shortcomings and limitations of its prior model. So, it is actually customary for what system to use instead of treating the models as standards. One fascinating feature in this evolution is that latest methodologies do not immediately take the place of older models. Thus, at any point in time, a variety of classification of systems exists across different organizations and may even coexist within a single enterprise. Now, we have 5 examples of information system models. 1. The manual processes. 2. The flat file systems. 3. The database approach. 4. The REA model, or the resources, events, and agents model. 5. The ERP systems, or the enterprise resource planning systems. Now, as been said on the previous slide, these examples per se are not exclusive. Hence, there are other types of models. In most cases, the system used depends mainly on the needs or efficiency of business enterprises' information on how it should be stored. Now, I will only be discussing the first 3 given models, while Mr. Anasin will be tackling the last 2 models. First off, we have the manual process model. The manual process model constitutes the physical events, resources, and personnel that has something to do with business processes. For example, order taking, warehousing materials, manufacturing goods for sale, shipping goods to customers, and placing orders with vendors. The manual process model is the oldest and most traditional form of accounting system. Manual systems comprises tangible materials and physical events resources and personnel that characterize many business processes. The very essence of this model is that we have to do every recordings manually. If we have to ship goods, we write it down. If we have to place an order, we take a note of that. As opposed to storing information digitally or having a device that records automatically. Thus, manual process model does a manual record keeping. Traditionally, this model also includes the physical task of record keeping. Oftentimes, manual record keeping is used to teach the principles of accounting to business students like us. However, this approach is simply a training aid and is never used in practice nowadays, because technologies have made it obsolete. Conversely, there are benefits in studying the manual process model before mastering computer-based systems. Learning manual systems helps students understand better the connection between the AIS course and other accounting courses. The AIS course is often the only accounting course in which students see where data originate, how they are collected, and how and where information is used to support every business operation. By examining information flows and the use of traditional accounting records in traditional transaction processing, the student's bookkeeping focus is transformed into a business process perspective. Next is the flat file model. The flat file model describes an environment in which individual data files are not related to other files. End users in this environment own their data files rather than share them with other users. Thus, standalone applications rather than integrated systems perform data processing. Simply stated, when multiple users need the same data for different purposes, they must obtain separate datasets structured to their specific needs as is illustrated. However, there is a problem. The data redundancy demonstrated in the example contributes to three significant problems in the flat file environment. One is data storage. Data storage is an efficient information system captures and stores data only once and makes this single resource available to all users who need it. In flat file environment, this is not possible. To meet the private data needs of users, organizations must incur the costs of both multiple collection and multiple storage procedures. Some commonly used data may be duplicated dozens, hundreds, or even thousands of times. Data updating. When users keep separate files, all changes must be made separately for each user. This adds up significantly to the task and the cost of data management. 3. The currency of information. The currency of information is very important because if updating information is not properly disseminated, the change will not be reflected in some users' data, resulting in decisions based on an outdated information. Now, we have the database model. This approach centralizes the organization's data in a common database that is shared by other users using database management system. With the organization's data in a central location, all users have access to the data they need to achieve their respective objective. The database management system is a special software system that is programmed to know which data elements each user is authorized to access. The user's program sends requests for data to the DBMS, which validates and authorizes access to the database in accordance to the user's level of authority. If the user requests data that he or she is not authorized to access, the request is denied. Clearly, the organization's procedures for assigning user authority are an important control issue for auditors to consider. And this illustration here is essentially an upgraded flat file model into a database model. The significant difference between the database model and the flat file model is the pooling of data in a common database that all organizational users share. With access to the full domain of entity data, change in user information needs can be satisfied without obtaining additional private datasets. Users are constrained only by limitations of the data available to the entity and the legitimacy of their need to access it. Through data sharing, the following traditional problems associated with a flat file approach may be overcome. 1. Elimination of data redundancy. Each data element is stored only once, thereby eliminating data redundancy and reducing data collection and storage costs. 2. Single update. Because each data element exists in only one place, it requires only a single update procedure. This reduces the time and cost of keeping the database current. 3. Current values. A single change to a database attribute is automatically made available to all users of the attribute. Now, Mr. Anasin will discuss about the REA model and the ERP system.
So hello guys, I am Jeremy Anasin and I will be your last reporter for this chapter. And with that, I am going to report the three remaining concepts of this chapter: the REA model, the ERP system, and the roles of an accountant in an information system. Topic number 1, the REA model. The REA model is an accounting framework for modeling an organization's critical resources, events, and agents, and the relationships between them. The basic REA pattern describes the three mentioned elements in a business process wherein two or more events can be associated with each other within the same process. One example is a sale transaction, wherein there is a cash receipt transaction, which is considered as one event, and a payment transaction, which is considered another event between the seller and the buyer. So, once specified, both accounting and non-accounting data about this phenomena can be identified, captured, and stored in a relational database. A relational database is a type of database that stores and provides access to data points that are related to one another for easy access. So, from this repository, user views can be constructed that meet the needs of all users in the organization. The availability of multiple views allows flexible use of transaction data and permits the development of AIS that promotes integration. Now, let's discuss the brief history of the REA model. So, REA model was proposed in 1982 as a theoretical model of accounting or for accounting. Advances in database technology have focused renewed attention on REA as a practical alternative to the classic accounting framework due to the emergence of computers. And it was originally proposed by William E. McCarthy as a generalized accounting model of how an accounting system can be re-engineered, as I've said, for the computer age. Now, let's move on to the key elements of the REA model. As I've said earlier, the three key elements of the REA model contains the concepts of resources, events, and agents. Economic resources are the assets of the organization such as inventories, cash, equipments, and properties. They are defined as objects that are both scarce and under the control of the enterprise or the organization. This definition, however, departs from the traditional model because it does not include the accounts receivable. An account receivable, as we all know, is an artifact record used simply to store and transmit data. And because it is not an essential element of the system, of the REA system, it does not need to be included in the database. Instead, AR values are derived from the difference between sales to customers and the cash received in payment of sales. The second element, economic events, are phenomena that affect changes in resources. They can result from activities such as production, exchange, consumption, and distribution. Economic events are the critical information elements of the REA accounting system and therefore should be captured in a highly detailed form to provide a rich database. Meanwhile, the third element, economic agents, are individuals and departments that participate in an economic event. They are parties both inside, also known as the internal agents, and outside, also known as the external agents, of the organization with discretionary power
to use or dispose of economic resources. Examples of agents include sales clerks, production workers, shipping clerks, customers, and vendors. To sum it up, business data must not be pre-formatted or artificially constrained and should reflect all relevant aspects of the underlying economic events. As such, REA procedures and databases are structured around events rather than accounting artifacts such as journals, ledgers, charts of accounts, and double entry accounting system. Under the REA model, business organizations prepare financial statements directly from the event database. To give distinction between classic and REA accounting, I will give you an example of a business transaction. September 1, sold 5 units of product X21 at $30 per unit and 10 units of product Y33 at $20 per unit to customer Smith. So the total sale is $350. The unit cost of the inventory is $22 and $16 respectively. So the total cost of goods sold is $200. And on September 30, received $200 cash from customer Smith on account with a check number of 451. So, in a flat file or non-REA database system, the two events would be recorded in a set of classic accounts like those shown in Figure 14, which is here. This involves summarizing the events to accommodate the account structure. However, the details of the transactions are not captured under this approach, like for example, the invoice, the address of the customer, etc. While an REA accounting system would capture these transactions in a series of relational database tables that emphasize events rather than accounts. This is illustrated in Figure 15, which is this. Each table deals with a separate aspect of the transaction, as you can see. Data pertaining to the customer, who is Smith, are the invoice, specific items sold, and many others can be captured for multiple uses and users. All in all, traditional accounting records, including journals, ledgers, and charts of accounts, do not exist as physical files or tables under the REA model. For financial reporting purposes, views or images of traditional accounting records are constructed from the event tables. For example, the amount of Smith's account receivable balance is derived from the total sales, which is the quantity sold times the sale price, and therefore we're gonna get 350 and less the cash received, which is 200, and so we are gonna get the balance of accounts receivable, which is $150. If necessary or desired, journal entries and general ledger amounts can also be derived from these event tables. For example, the cost of goods sold control account balance is quantity sold times unit cost summed for all transactions for the business period, and that would be equal to $270. Now, let's move on to the Enterprise Resource Planning System, or the ERP system. ERP is an information system model that enables an organization to automate and integrate its key business processes. ERP breaks down traditional functional barriers by facilitating data sharing, information flows, and the introduction of common business practices among all organizational users. One of the problems with the ERP system is that the standardized modules may not always meet the exact needs of the organization. For example, a textile manufacturer in India implemented an ERP package only to discover the extensive, unexpected, and expensive modifications had to be made to the system. The ERP would not allow the user to assign two different prices to the same bolt of cloth. The manufacturer charged one price for domestic consumption and another price for exported products. That particular ERP system, however, provided no way to assign two prices at the same time at the same item while maintaining an accurate inventory count. So, organizations to be successfully implementing an ERP will need to modify their business processes to suit the ERP, or modify the ERP to suit their businesses, or more likely, modify both. These applications, often called bolt-ons, are not always designed to communicate ERP packages. The process of creating a harmonious whole can be quite complex and sometimes fail, resulting in significant losses to the organizations, and that is why the ERP packages are enormously expensive. The last topic that I am going to discuss is the roles of an accountant in the information system. So, accounting information system will not work out if there will be no accountants responsible for the application of that. Therefore, accountants are primarily involved in the AIS, and their roles can be categorized into three ways: as, as system users, as system designers, and as system auditors. In most organizations, the accounting function is the single largest user of IT. All systems that process financial transactions, in most organizations, the accounting function is the single largest user of IT. All systems that process financial transactions impact the accounting function in some way. Therefore, as end users, accountants must provide a clear picture of their needs to the professionals, like the IT professionals who design their systems. For example, the accountant must specify accounting rules and techniques to be used, internal control requirements, and special algorithms such as the depreciation model the company applies. The accountant's participation in systems development should be active rather than passive because, as we all know, the absence of user involvement is the principal cause of design errors that result in system failure. Appreciation of the accountant's responsibility for system design requires a historic perspective that predates the computer as a business information tool. Traditionally, as we all know, accountants have been responsible for key aspects of the information system which were physical, observable, and unambiguous. The procedures for processing information were manual, and the medium for transmitting and storing data was paper. With the arrival of the computer, computer programs replaced manual procedures and paper records were stored digitally. The role accountants would play in this new era became the subject of much controversy. Lacking computer skills, accountants were generally uncertain about their status and they are unwilling to explore this emerging technology. Many accountants relinquished their traditional responsibilities to the new generation of computer professionals who were emerging in their organization. However, computer programmers with no accounting or business training, which is, as we all know, more often than not, they have no business training, assumed full responsibility for the design of AIS. As a result, many systems violated accounting principles and lacked necessary controls. Large system failures and computer frauds marked this period in accounting history. By the mid-1970s, in response to these problems, the accounting profession began to reassess the accountant's professional and legal responsibilities for computer-based systems. Today, it is widely recognized that the responsibility for system design is divided between accountants and IT professionals as follows. The accounting function is responsible for the conceptual system, and the IT function is responsible for the physical system. So basically, accountants are more responsible for the ideas for the system, while the IT function is responsible for the technological. Third role of an accountant in the information system is that they act as system auditors. Auditing, as we all know, is a form of independent attestation performed by an expert, the auditor, who expresses an opinion about the fairness of the company's financial statements. Public confidence in the reliability of internally produced financial statements rests directly on their being validated by an independent expert auditor. Both internal and external auditors conduct audits. External auditing is often called independent auditing because certified public accountants or CPAs are independent of the client organization's management perform them. External auditors represent the interests of third-party stakeholders in the organization, such as stockholders, creditors, and government agencies. The external accountant's responsibility as systems auditor has been expanded by the broader concept of assurance. Assurance services are professional services including the attest function that are designed to improve the quality of information, both financial and non-financial, of the financial statements. The external accountant's responsibility as systems auditor has been expanded by the broader concept of assurance. Assurance services are professional services including the attest function that are designed to improve the quality of information, both financial and non-financial, used by decision makers. For example, a client may contract assurance services to obtain an opinion as to the quality or marketability of a product. Alternatively, a client may need information about the efficiency of a production process or the effectiveness of their network security system. Meanwhile, IT auditing is usually performed as part of a broader financial audit. The organizational unit responsible for conducting IT audits may fall under the Assurance Services Group or be independent. Typically, they carry a name such as IT Risk Management, Information System Risk Management, or Global Risk Management. The IT auditor attests to the effectiveness of a client's IT controls to establish their degree of compliance with prescribed standards. Because many of the modern organizations' internal controls are computerized, the IT audit may be a large portion of the overall audit. Lastly, internal auditing. Internal auditing is an appraisal function housed within the organization. Internal auditors perform a wide range of activities on behalf of the organization, including conducting financial statement audits, examining an operations compliance within the organizational policies, reviewing the organization's compliance with legal obligations, evaluating operational efficiency, detecting and pursuing fraud within the firm, and conducting IT audits. The tasks that external and internal auditors perform are similar. However, the feature that most clearly distinguishes the two is their respective constituencies. External auditors represent third-party outsiders, whereas internal auditors represent the interests of the management. Again, I'm Jeremy Anasin and I hope that you've learned something from my discussion. Thank you.